Well, those were the headlines that we're tracking this evening. Let's now toss over to Shireen Bhan, who's joined by a very special guest. Over to you, Shireen.
Well, thanks very much, Ashman. Joining us now is the new president of FICCI, Subhrakant Panda. He joins us now to discuss the state of the economy and, of course, the upcoming budget. Subhrakant, always a pleasure. Many thanks for joining us. And to start with, congratulations on taking over as president of FICCI. Let me start by asking you about this...
Thank you, Shireen.
The COVID scare, there are meetings that are taking place. The government has issued advisories. The IMA has issued an advisory. Is there a fear within industry that restrictions of some sort could be brought back?
So Shireen, for the last day and a half, I guess, we have been hearing a lot of news coming out of China about, the supposed unrestrained spread of COVID. They have reversed their zero COVID policy, but have done it in a manner which is, sort of an abrupt lifting of restrictions. But my view is that, I don't think we should panic. And more than anything else, I think one has to wait and watch for the next few days as to, what is the information flowing out. Because that's a country, that's a society where there's a lot of regulation on news flowing out. So I would much rather, wait for more information, a bit more authentic information. But having said that, I must commend the government for being proactive, with the Health Secretary writing to all the states and stakeholders to be vigilant, to do genome sequencing, which I think is very important in order to catch any new strains. But more for the Chinese people and as much as for the world, I would really hope that this is something that is under control. Because from an industry perspective, of course, there could be the possibility of more supply chain disruptions, which we can hardly afford if this does spiral out of control. But I would prefer not to speculate at this point in time. And we must, of course, keep in mind that it's the human cost that is more relevant than anything else. And as I said, I think more for the Chinese people as for the rest of the world. I hope that this is not something which is out of control, and most of the cases are mild. But from our point of view, at this point in time, I think it's more about remaining vigilant, which is what the government is doing. The government of India has conducted the world's largest vaccination drive, so about close to 100% of the population is vaccinated with 2 doses, a large number with the 3rd precautionary dose. We have a degree of herd immunity, I believe, with previous infections. So I wouldn't panic at this point in time, but of course, vigilance is the need of the hour.
No, absolutely. Very appropriately put. There is no cause for panic at this point in time. The overall cases in India, over 150 at this point in time in terms of active cases. Yes, there is need to be vigilant, but there is no cause for any panic. And please don't go by any of these WhatsApp messages that are doing the round on how virulent the new strain in China is and how deadly it is and so on and so forth. Those are misleading messages. And once again, we're urging all of our viewers to verify before forwarding messages, and these messages have been doing the rounds since morning. It only causes panic and creates confusion. But Subhrakant, we're almost at the end of 2022, and it continues to be a fairly challenging global environment. Even back home, the festive season is over. There are concerns on whether demand is going to continue to hold up. We have, of course, seen rates moving higher as well. What's the overall mood within industry at this point in time?
Well, if I were to take you back a little bit to the start of the pandemic, where I believe both the timing and the quantum of the stimulus measures were spot on, because world over we have seen an excess of stimulus has led to elevated inflation, which is more stubborn. From that point of view, India has had a much better time. I mean, we did have a fight with inflation, but that was by and large imported. And with commodity prices cooling off in the last couple of quarters, we have seen inflation come within the tolerance band of the central bank. And that is something that to be quite happy about. I mean, of course, I do agree with the governor that it's not something that we can assume that it's over. I mean, I think the worst is behind us, but one has to be vigilant about inflation. But having said that, the focus must now shift squarely to growth. And I mean, for FY23, India is, of course, at about 7% growth, the fastest growing large economy. But I think going ahead, we will have a little bit of a challenge on our hands and, some short-term turbulence, as I have been saying, for the simple reason that global growth is going to slow down sharply. I'm sure you're aware of the IMF forecast that, global growth, which stood at 6% for 2023, is going to nearly halve to 3.2% in 2023 and further to 2.7% in 2024. And, as well as India has done, we are neither an island nor are we decoupled from the rest of the world, and that is something that we have to be, we have to watch with a little bit of caution. But we are about as well prepared as we have ever been for a situation of this sort. And even let alone the World Bank's upgradation of growth projections for the current year. Even for next year, the growth forecast is between 6.1 to 6.5%, which will again make us the fastest growing large economy, which is really commendable. But the effect is there in terms of, for example, exports, where after a period of sustained increase in exports and merchandise exports crossing the $400 billion mark last year to set a new record, we have seen headwinds, and that is a reflection of the second degree impact, so to say, of persistent inflation and in Europe and the US, and not to mention, of course, I think 1/3 of the global economy, if I'm not mistaken, is facing recession, which is 2 consecutive quarters of negative growth. So India is well prepared. India is in a sweet spot, yeah. But we certainly have to be sort of navigate through a year or so of short-term turbulence while keeping our eye on the tremendous opportunity that India represents over the medium to long term.
Subhrakant, speaking of events coming up in the near term, we've got the budget around the corner. One of the specific recommendations that FICCI made was that the government should give out the concessional tax rate of 15% to corporations for the next 5 years. The sun sets on that in 2024. It's already been given a 1-year extension by the government. Now, in my conversation with the former Revenue Secretary, Tarun Bajaj, he was very clear. He said, look, industry needs to come to us and put down a number and give us an assurance of what they're going to invest for us to consider extending the timeline. The finance minister, again in Parliament, reiterating, asking the private sector to step up and invest. So, in light of the fact that given that there was this concessional rate available, yet we haven't seen any significant pickup in private capex, what's the expectation?
Well, I will be the first one to admit that, you haven't seen, the private sector capex over the last year and a half. And I think that is a reflection of both the pandemic period and the aftermath, where obviously there were some growth concerns. But the point I made when we had the conversation about extending this for 5 years is that today, I think with the PLI schemes and other measures aimed at enhancing the ease of doing business and reducing the cost of doing business, I think India is an ideal destination to attract investment, especially global supply chains looking to move out of China. And I think a live example of that is at a time when China has had disruption, mobile phone exports out of India have shot up. And that's a real live example of what we can achieve and why there is a need for global corporations to consider an alternate to China. Now, getting back to the point about the fact that there hasn't been enough investment, we have to keep in mind that when global supply chains look to move, it's not a decision which is taken easily, and it takes time to implement. And that is why we believe that a window of 5 years, which provides some certainty, would help in attracting investment. But coming to the point about private sector investment, I do agree that it is something which needs to pick up. I commend the government for the heavy lifting they have done during the pandemic period and its aftermath. It was absolutely necessary to support the economy, to shore it up. I think the fact that it has continued, I believe, will now start crowding in private sector investment. But the data, if you look at it, for Q2 of FY23, the value of new project announcements is about 3.3 trillion, which is more than the 2.7 trillion in Q2 of FY22 and noticeably more than the 1.2 trillion in Q2 of FY21. So there is an upward trajectory, and not to mention, there is also some hidden private sector capex, if I can call it that, because nearly 8 trillion rupees worth of projects which were either stuck up or not operating at optimum capacity because they were in NCLT. These assets have changed hands. There is investment going in to debottleneck and increase production or increase output and bring idle assets back online. So, there is private sector investment happening. And I'd just like to take a minute to share another point, which is the latest manufacturing survey that FICCI put out, which was again pertaining to Q2, showed that the capacity utilization on average is about 70%. And normally the belief is that if you hit about 80-odd%, that's when you see investment come in. But what the 70% sort of covers is that there are certain sectors like automobiles and paper products, etc., which are operating at 90 to 95%, and that's where you are seeing announcements being made. But there are also sectors which are 50 to 60% capacity utilization, and the slack needs to be taken up first before you see any new announcements. So I think private sector investment is happening. It's more than a trickle. It is gaining momentum, and I believe that it's headed in the right direction. I think government capex continuing will crowd in, as I mentioned, and overall start the virtuous cycle.
A final question before I let you go, and very quickly, Subhrakant, I would imagine that there's been consultations with the government on the IBC. While it has done its job, there are amendments that are now likely to be brought in as far as the IBC is concerned. Any check on what industry believes needs to change by way of amendments?
Well, I'm not very up to date on this aspect, but certainly we have had consultations. But keep in mind that IBC is a very, very important piece of legislation. It has certainly brought about discipline in borrowing, because you can't take things for granted anymore and go out on a limb and say that we'll see how things pan out. There are very real consequences for defaults, and as it should be. But in as much as the legislation itself is concerned, as I said, it's a very important piece of legislation. It's still relatively in its early days, if I were to call it that, in terms of precedences being set. And I'm glad that the highest judicial authority, for example, the Honorable Supreme Court, has clarified time and again that when ownership changes hands, then a lot of the mess that was created gets left behind, so that the new the new owner operator can proceed unhindered. But these are there are still occasionally you have issues coming up in terms of older demands or statutory dues or something of that sort coming up. So I think most of our suggestions have centered around ensuring that there is a clean break between what happened in the past and the attempt to revive. Of course, the focus must be on maximizing value for creditors. But I believe there is perhaps a little bit of need to look at issues like operational creditors, especially the small creditors, the MSME sectors, without necessarily impinging upon the rights of secured creditors. But these are the sort of methodology to arrive at the best valuation and allow for as many competitive bids to come in. So these are the sort of recommendations we have made. But I must confess that I'm not up to date on the exact points that we have covered on this.
Subhrakant, always a pleasure. Appreciate you joining us, and we wish you the very best of luck as you start your tenure as the president of FICCI. Appreciate your time. Well, I'm going to toss it back to Ashmit for all the other news. Ashmit.
Right, Shireen, thanks a lot for that. So there you have it, the new FICCI chief laying out the agenda ahead of the budget. But with that, it's time now for slipping into a very short break. But coming up on the other side, Reliance Retail acquires Metro Cash and Carry India for 20